Welcome back to Money Media. James here, and today we're going to cover a huge topic: oil, war, and gold. So before we get into covering a couple of asset classes around wartime, I really want to cover this and that. So I had a conversation with my daughter recently. She's only 6, so she's starting to ask the really hard-hitting questions about the world. And she happens to have an uncle who's in the Australian Defence Force, and so naturally a few questions came out around military and fighting wars and things like that. And she asked me about countries and how do countries win wars. The way I kind of answered that was in the way that I don't believe war actually has any real winners because of the loss on either side that it tends to accumulate. And so I wanted to caveat this video in by saying that when I cover these asset classes that are generally do all right during wartime, I'm not trying to offer advice on how to profit during global tensions and global misery essentially, but what I'm trying to offer is a few options for you to consider if you are trying to keep your level of wealth safe during periods of high levels of uncertainty throughout the world. So I just wanted to caveat that briefly. So let's kick this one off with gold. Now, gold has been a store of wealth since storing wealth was a thing. Thousands and thousands of years we've been, as humans, pouring our wealth into gold to store it, to accumulate it. And so it comes as no surprise that when there is a lot of high levels of uncertainty throughout the world during global conflict, that when I say people, I generally mean investors and government, but you know, the world population broadly tend to flock to gold because it's a asset class that bears very little risk. And what that means is there's very little risk of it falling in value. In fact, all countries around the world view gold as money in lieu of real currency. And so the reason why that's important is because during times of conflict, countries pick sides and no one really knows who the winners and losers are going to be and how one currency may affect another currency, and therefore the values of each of those currencies, whose currency may go up, whose currency may go down. And so because of that, and to mitigate against that risk, investors, governments, etc., tend to flock to gold. And what it does is it holds their value of wealth stagnant, let's say. It tends not to go up, tends not to go down, but it keeps it level. An important point to note here, especially during this time, is that all it would take for you to do is a quick Google search and you'll quickly find that the price of gold is going up quite dramatically. Now, I do want to point out here that I think this is paired also with another important macroeconomic factor, and that is that global sentiment in fiat currencies is already at an all-time low and continuing to fall. So not only do we have uncertain times, which is putting upward pressure on the price of gold, but we also have lack of sentiment in fiat currency, which is also putting major upward pressure on gold. So what we're seeing now is gold prices almost look like profitable assets as opposed to being just a safe haven for what they have historically been. Now, if you're watching this and you're looking at the gold prices and you're thinking that, hey, that's a little bit out of my price range, I understand that because they're out of most people's price ranges currently, the price of gold. If you're thinking this, then can I suggest that you do some research into the price of silver? Now, I really like silver as an asset class. I've liked it for quite a number of years now. And there are two main reasons why I've really taken an interest in silver in the last few years. Now, the first one is being that it's more easily divisible. So, look, if things really did hit the fan, which they're probably not going to, but if things really got out of hand and people were forced to make their purchases outside of the current financial system, i.e. fiat currency, then they would be forced to use some sort of precious metal. But gold can't be really used as a medium of exchange in every day-to-day transaction because of how expensive it is. So you need something that's more greatly divisible in smaller amounts, and you can do that with silver. So you can do that with silver coins, etc. That's one of the reasons why I think silver is a really, really good alternative, and it has been for quite a number of years now. And the second reason why I really like silver as an asset class against gold is because if you look at some of the developing economies around the world, they've actually in the past few years shown a really strong trend towards silver as an investment inside the family home as opposed to gold, because it is cheaper and it has very similar properties, and therefore you're allowed to retain, therefore you're able to retain your family's wealth within a precious metal that's in a much more affordable price range as opposed to gold. So silver has been trending for quite a while now, quite a number of years. I've been a real big fan of it, and while everybody's talking about gold prices, I think silver is something not to be shirked at. I think you should really consider it as an asset class, as an alternative to gold. I want to go now into oil, and if you're watching this at home, or in your car, it's highly likely that you don't have the means or the capacity to buy oil by the barrel and store it in your home. But the value of oil tends to go up dramatically during times of global conflict. And the reason for that is, going back to normal supply and demand factors, the demand for oil significantly increases during times of uncertainty because governments buy it and companies buy it in very large amounts. The reason why they do that is because there's a lot of uncertainty around what will happen with the supply of oil. So, especially at the moment, some of the countries that are engaged in global conflict are actually major suppliers of oil, and it's arguable that some of these conflicts are actually centered around oil, but that's for another video. So not only are some of the suppliers of oil in conflict, but what global conflict also does is it affects shipping routes. And so if shipping routes globally become longer because cargo ships are having to reroute to avoid certain parts of the world that are in conflict, then shipping prices go up and therefore oil prices go up. And so during war times and times of global conflict and uncertainty, governments tend to buy and store more oil so they can safeguard a certain percentage for their own economy. Now, why is oil so important? Everything we buy, everything we consume, oil has a huge hand in all of it. So if we're looking at clothing, for example, to receive the raw materials just to make that clothing, we need oil just to receive it. And then when it comes time to production of that clothing, we also need oil in the machinery to create the clothing. And then come time to sell it, we need transport. We need oil for the transport to transport the clothing around to eventually sell it. And so without oil, economies literally come to a standstill. A really good example of this was during the C-19 period about 4 or 5 years ago, where for the first time in my living memory, barrels of oil actually went inverse in value. And what that means is, because production came to a halt, there was no demand for oil. So the price naturally fell. But not only did the price fall because of a lack of demand, but there were also suppliers who already had very large amounts of oil. So because there was a very low level of demand, the price of oil per barrel dropped significantly. But the suppliers of this oil had lots of oil on hand that they had to store, and storage is expensive. So it actually came to a point in time where suppliers of oil who were storing their barrels of oil actually paid companies and governments to take the oil off them, because paying them to take the oil away from them was actually cheaper than paying for the storage of that oil. And that's one example of oil prices going inverse. It's fascinating. And another side note to point out about oil, and I'm not going to go too deep into this, but something to consider, it's actually slightly concerning, is that with one of the countries currently involved with this conflict being Iran, is a major supplier of oil. One of their main customers is China. So there's a lot of talk that China may actually get involved in this global conflict in the corner of Iran. And the reason for that is because they don't want to risk their oil supply, because they know, China knows, if they have no more oil, then their production comes to a halt, which is what I was talking about earlier. Oil is very important and can be a real concern during global conflict. And so what we actually may see if this conflict escalates, which I think it will, it looks to be heating up and not simmering off, what we may begin to see in Australia and around the world is prices of everything go up slowly. And now I've got a bold prediction for a new asset class that I think is going to do really well in the back half of 2025. And the reason why I think that is because of the global conflict and uncertainty going on. Now, I want to talk Bitcoin. Bitcoin is my bold prediction. We haven't seen Bitcoin perform during serious global conflict yet. It's too new. It's not yet battle tested, excuse the pun. But I think it's going to be, and I think it's going to do well. And the reason for that is because it has a major advantage over gold. It actually has two. So one of gold's major weaknesses is that it costs a lot of money to store. Not only that, but it also costs a lot of money to transport. It's bulky and it's heavy. So because of those two things, storage and transport can be quite costly. Bitcoin, regardless of the value of 10,000, 100,000, 100 million, 100 billion, whatever the value of that Bitcoin, it can be stored on a single device, essentially the size of a USB. And so it has zero transport costs and it has zero storage costs as well. And so I think because of that, investors, governments, etc., are going to see the value in holding Bitcoin as a store of wealth alongside gold. I don't think gold is going anywhere. I think its place within the economy and within wealth preservation will remain the same going forward. But I think Bitcoin just will be an addition onto that because of the factors that I've just said. I think back half of 2025, we're going to see an increase in gold prices. We're going to see an increase in Bitcoin prices, and watch your household spending, because I think goods and services may go up with the increase in oil. And if you are holding cash, just be wary. As I said earlier about fiat currencies, sentiment is at an all-time low globally. So if you are holding cash, then just keep an eye on it. Anyway, thanks for stopping by. That's our Money Media edition on oil, gold, and war, and I'll see you for the next video. Hey you, thanks for supporting Money Media. If you do have something to say, whether it be positive or negative, leave a comment and I'll get back to it. I could be really interested in hearing your thoughts. And also, if you want to be updated with all our new content that comes out, please hit the subscribe button, and that way YouTube will take care of the notifications for us. They'll ping you every time we upload something new, which often can be quite time sensitive. I'll see you in the next video. Thanks for joining.